And to my last session of interaction or discussion, already I have discussed what are the subsidiaries books to be maintained by the accountant or the so-called financial accountant, so-called cashier. Those sometimes cashiers are also entrusted to keep the financial accounting on behalf of the organization. Still, it would be better on our part to recapitulate the same. Again, I would like to discuss, as we know, since your studentship in the beginning, maybe commencing from 4th, 5th standard, you would have read about or you would have gone through your water cycle. Likewise, in our financial accounting system also there is an accounting cycle. So in an accounting period, these are to be maintained. First of all, how the accounting cycles are to be maintained. First, our step is to record the transaction, recording of transactions in subsidiary books. Then second step is your posting. Number 3 is preparation of finalization of accounts and closing accounts. These are these 3 steps which are very important on the part of the financial accountant to go through accounting cycles. Number 1 step is recording transactions in subsidiary books, and number 2, all the data which have been recorded in our transaction statement or again to our subsidiary books, starting from your journal, then cash book, then purchase register, sales register, purchase return register, sales return register, bills receivable, bills payable, carriage inward and carriage outward. After recording the transactions in the subsidiary books, then we have to shift the information or data from various subsidiary books to various ledgers. Already I have narrated before you. There are 2 types of ledgers. Number 1 is general ledger, which contains almost all the data regarding real accounts and nominal accounts. And in personal ledgers, all the parties information or particulars of the parties are to be maintained in personal ledgers. So that is called the shifting of data from your subsidiary books to respective ledgers are called posting. Then after completion of posting, we have to go for preparation of finalization of accounts. And what is the intention or objective behind preparation of finalization of accounts is to ascertain the profit earned by the organizations during a particular financial period or accounting period in case of profit. But in case of loss, what is the original volume of loss? That can also be ascertained through finalization of accounts. And for finalization of accounts, you have to go for your final accounts. That is called final accounts. And at the same time, after doing the finalization of accounts, we have to go for closing entries or closing of accounts. Some accounts are to be maintained to close the accounts, and again after completion of one accounting period, again the next accounting period or financial accounting period is started. So that is called opening entries, and after closing of all accounts, that is called closing entries. Some closing entries are to be maintained. So in the preparation of finalization of accounts, usually what we have to do, final accounts consists of, number 1 is manufacturing account. Number 2 is trading account. Number 3 is profit and loss account. Number 4 is balance sheet. As we have already discussed, manufacturers are there in every nook and corner of our globe. So when we are to manufacture, or when we are producing goods, or when we are rendering services for the public at large, for the customers at large throughout the globe, or in our particular areas, definitely we have to ascertain the manufacturing cost of the product. So if we are manufacturing the products, definitely we have to know the manufacturing cost of the goods which we have produced, and at the same time, supposing our organization is focused on rendering services for the public at large or customers at large, then the same procedure have to be also be followed. Then we can ascertain the rendering cost of service per unit, or as the case may be. If the unit is voluminous by nature, then we may also increase the same, and that is why we have to do manufacturing account. Again, we have to go for trading account. In trading account, what we will do, we have to take all the accounts in a systematic way, and we can ascertain the gross profit or the gross profit or gross loss of the organization during a particular financial period. From trading account, we have to account for almost all the direct expenses and all the direct incomes of the organizations, apart from our opening stock and apart from our closing stock, as the case may be, or as the figures may be. After reckoning all these things, we can ascertain either if the direct incomes is more than the direct expenditure, then automatically the organization has earned gross profit. That is called gross profit. On the contrary, or if the situation is something different, or direct expenses are, if the direct expenses are more than the direct incomes, then automatically the firm would have suffered gross loss instead of gross profit. The difference between the direct incomes and the direct expenses will be taken into account, and then we can ascertain the gross profit or gross loss. Then the original gross profit or the gross loss is not the original gross loss or original profit of the organization. Original loss is also not there, and original profit is also not there. So automatically we have to go into details, minute details of the financial activities. That means we have to go for profit and loss account, and profit and loss account contains almost all the information related to indirect gains and indirect expenditures. We would have taken almost all the direct expenses and direct losses and direct incomes in our trading account, and in the profit and loss account we have to take all the indirect expenses and indirect incomes of the business during a particular financial period. So we can ascertain through profit and loss account, we can ascertain the net income or net profit or the net loss, as the case may be. If the business has earned profit, then we can get or we can ascertain net profit. If the business has suffered loss, then we can ascertain the net loss. If profit and loss account contains all the information regarding indirect incomes and indirect gains, and at the same time indirect expenses and indirect losses, then we have to deduct the same from our gross profit. In case if the business has earned profit, then the gross profit figure and the total indirect expenses again Gross profit plus indirect gains are to be added. Again, indirect expenditure are also to be deducted. Out of which, if the differences is there, then the difference will be asserted or will be reckoned as net profit of the business, or on the contrary, if the business has suffered loss, then automatically in the trading account we would have got our gross loss, and after taking all the indirect incomes and indirect expenses in our profit and loss account, automatically our loss will also increase. So naturally we will be suffering net loss. So in that case, net loss will be definitely more than the gross loss. So this is the way in which we can ascertain the gross profit or gross loss of the business organization during a particular financial period, through which we can ascertain the profit, whether the business has earned profit or the business has sustained loss. Now, before coming to your posting, again I would like to pay certain attention to the users of accounting. Sometimes we couldn't accounting users. Who are they? We know that almost all the businessmen on this planet definitely would be inclined or will be interested to know the financial performance or financial stability, credibility of the business organization, for which our financial accounting has served a great purpose. So financial accounting has the following users. Number one, owners or proprietors or whoever may be the owners, because in case of various forms of business organization, the owners of the business organizations or their nomenclature or their name varies. So we can able to know, if we know that owners are interested to know the financial credibility of a business, then automatically the first user of accounting or financial accounting is business owners, then your or proprietors. Number two, management. Who are the management people? Sometimes you would have seen in our state, particularly in a state like ours, we have seen sometimes we treat management people as the owner of the organization, but exactly that is not the thing. Management is something different, and they have been entrusted to look after the day-to-day affairs of the organization. Not necessarily they are the owners. Sometimes they may be, if their stakeholding position is like that, they may be the owners of the business, but ridiculously we cannot say that the management is always the owners of the business. So if the management segment is entrusted with certain groups of people, then they are also to be treated as the accounting users or users of the financial accounting, because if the management group or the people, those who are entrusted or those who are looking after the day-to-day management of the business, if they are not aware of financial accounting, or if they are not aware of the financial position of the organization, day-to-day occurrences of the business organization, they cannot but maximize or optimize their management. So definitely they should know the financial standard of the business organization. So they are also coming as users of the accountants or financial accounting. Then next one is your creditors. Already I had discussed who are the creditors of the business. Suppose the business has taken certain amount of money or certain services in terms of money for which the business has not yet made the payment, then the parties from whom they have taken the goods or they have taken the cash on credit, then the parties, those who are at outsides, they are called creditors. That means the business has to give back that money for which they are liable to pay. So creditors are also intended to know the financial credibility of the business organizations. They are the creditors. And we being the businessman, we may treat ourselves as debtors because we have to meet that liability for the future to come or for the timing to come. Then next one is investors. Already in my introductory chapter or introductory interaction I have discussed, sometimes we may also invite some investors from outside to invest their money in our business. So naturally the parties or the people, those who will be investing their money in our business, they will be defined as investors, and automatically they will be intended or they will be interested to know the financial credibility of the business organization. So they are also coming under the category of the users of the accountancy. The next one is employees. In a business organization, of course, gradually, because when an organization starts, the employees number may not be more according to the requirement, but gradually when the activities of the business organizations increases, automatically more and more staffs are taken into account or taken into the service. So there are many people, those who will be treated as an employee of the business organization. So they can also able to know, they can also ask for the financial credibility of an organization. So they can also go through financial accounting, for which we may say employees are also users of the financial accounting. The next one is governmental authorities. We know that almost all the business are applying or functioning in the society at large, and we know that in a society government authorities are there, like tax authorities are there, income tax authorities, excise authorities are there. So many governmental authorities are there, those who can poke their nose for various purposes of the business organization, and particularly as far as finance is concerned. So automatically governmental authorities are at liberty to go for various accounting statement or various accounting methods and standards of an organizations. So apart from governmental authorities, we may also take another party or another group, those who are research scholars. Many times research scholars are also generally inclined to know the financial credibility or the financial performance or the growth of the finance of an organization, and for their various purposes. We know that research scholars can go for anything, and a good organization should not deny or should open almost all their doors and windows for the scholars, research scholars. Maybe their financial accounting is concerned, or maybe for management accounting, or maybe for cost accounting. So for almost all the segments they can venture. Of course, after taking prior permission from the owners of the organization or from the management of the organization, research scholars are also intended to know various figures of the various standards of the organization as far as finance is concerned, and it is our financial accounting which will give almost all the possible information and particulars from the business, and if it is equipped at par. Then certain terms we should definitely know, that is called drawings. Suppose we are going to commence one business, and that business, suppose in day-to-day activities we know that medicines are the common item. I do not think a single family would have been there in our society, those who are living without medicine. Supposing our business unit will be a medicine store, and we may also we may be at liberty to use various medicines as per the prescription or as per as the opinion of the doctors. And we have our own medicine store, maybe a retail store, maybe a wholesale store, maybe a stockist, maybe at the status of your super stockist or consignment forward business, whatever may be. Supposing if we are consuming medicines, it should be our general focus to purchase our own thing from our own business unit. Otherwise, we will be losing our credibility in the society at large, because the customers at large will have a doubt why this man has his or her own business units, but instead of using their own product, they are purchasing from outside. So naturally, we will be inclined to purchase our own day-to-day requirement medicines from our own medicine store, and sometimes we may not be in a position to pay immediately the value of the medicine. In that case, supposing we are taking the medicines cost rupees 500. Already I have discussed in my dual entity concept that business and businessmen are two different entities. Naturally, this concept also guides us in the way in which, if we have purchased from our own medicine store cost of rupees 500 and we have not paid it immediately, it is to be written as drawings. That means if the owners or the proprietors of the business is taking some goods or services or cash directly from the business, and that amount particularly which he or she owes to the business is to be again paid back, then that is to be defined as drawings. So when a businessman draws money or draws goods or services or uses services of the business organization for his own sake, for his own personal life sake or familial sake, then the amount will be again paid back to the business organization. If we are not doing that justice to the business organization, then automatically that could be a complete threat to the business organizations. So sometimes it is observed that many a businessmen on this planet have suffered loss, and usually their business is also not there in the existence due to this loopholes, due to this weakness. When we are at liberty to use our own medicine, to use our own product, to use our own service, but with a condition, we have to pay for the same as if we are the customers. So that is called drawings. Then today I am intended to show certain journal entries. Suppose Roshan starts business with rupees 5 lakhs. Roshan starts business with rupees 5 lakhs. Today is 16th May. On 16th May, Roshan, a particular proprietor or a man, starts business with rupees 5 lakhs. So when he is investing his money in a business, it is called capital. It is called capital or owner's equity. We are to try it. We have to record the same. This is a transaction because the business of Roshan takes rupees 5 lakhs from Roshan. The business of Roshan is something different than this Roshan. So automatically Roshan's business has taken a sum of rupees 5 lakhs from Roshan. So automatically we have to journalize in this way. Our journal pro forma is like this. First one is date, then particulars, then ledger folio, then debit amount and credit amount. This is date, this is particulars, this is ledger folio, this is debit amount, or in short you can write dr dot debit AMT and credit amount. So when we have to journalize this transaction in our journal, we have to write down what has come to the business. A case of rupees 5 lakhs, that is defined as a real account. So cash account has to be debited. Was cash account debited to capital account. Instead of writing Roshan's name in his own business book, it should be written like this, capital account. So in the debit figure 5 lakhs, here in the credit figure also 5 lakhs. And here in narration or in parenthesis we should write down being introduced in the business. Being introduced in the business. So date, particulars, ledger folio, debit amount, credit amount. And when Roshan starts business with rupees 5 lakh as capital, cash account debited to capital account being introduced in the business is enough, which will subsequently remind us that this an amount of rupees 5 lakhs have been taken by Roshan's business from Roshan. So again transaction starts when it will go on. Again purchased furniture from Messrs. Shyamlal for rupees 1 lakh. Here one thing I would like to say that if we have kept a name in our books, then automatically it is to be assumed that the transaction has been made on credit. So purchase furniture for the business sector, definitely one person has to purchase various furniture. So purchase furniture from Messrs. M oblique S is Messrs. Shyamlal for rupees 1 lakh. So furniture is real account and Shyamlal is personal account. What comes into our business? Furniture comes into our business. And from whom? Shyamlal. Shyamlal is a personal account, and who is the giver? Receiver of furniture is Roshan, and who is the giver of furniture? Shyamlal. So in our books, what should we write? What should I enter in our particulars column? Suppose it is done on 17th May, it should be written as furniture account debited to Shyamlal account. 1 lakh in debit figure and in credit figure also 1 lakh. Being purchased on credit. Being purchased on credit. Being purchased on credit. So after purchasing furniture of 1 lakh value on credit from Shyamlal, we have to write down furniture account debited to Shyamlal account for rupees 10,000. 1 lakh. So when a transaction statement has nothing to mention the name of any organization or any particular person, then the transactions are cash transaction. If name is written instead of cash, then automatically it is to be assumed that the transaction has been made on credit. Next, number 3, cash deposited with SBI for rupees 4 lakhs. This is also a transaction, because out of from the available cash of rupees 5 lakhs, Roshan has deposited a sum of rupees 4 lakhs with State Bank of India. So it also calls for a journal entry. What you should write? That suppose it is on 17th May. 17th May it should be written. 17th May that should be there. And in particulars we should write down bank has received, receiver of the case is bank. Bank name is, instead of bank we should write down State Bank of India. State Bank of India debited to cash. What goes out from our business is cash. So SBI account debited to cash account, naturally 4 lakhs. Being deposited with cash. With bank. It is a standing instruction or standard norms of the business people to keep less cash, because to give safe custody of the cash, it is a common habit of the business people to deposit the available cash with the bank. So when Roshan has deposited a sum of rupees 4 lakh with SBI, it called for a journal on 17th May. State Bank of India debited rupees 4 lakhs to cash account. Yes, again also 4 lakhs, because one debit has corresponding credit and one credit has corresponding debit. That is why we say that it has a dual aspect. Debit aspect is there, and at the same time credit aspect is there, for which some scholars say it is double entry bookkeeping. Sometimes we take, sometimes we give. So what we give and what we receive have two aspects. So if we are measuring both the aspects and if we are giving importance or focused on both the aspects of the business, both the aspects of the transactions, then it is called double entry bookkeeping. Then the fourth transaction, paid to Shyamlal a sum of rupees 49,500. Already in our previous transactions or previous transaction statement we had mentioned that Roshan has purchased furniture of rupees 50,000 and paid to Shyamlal rupees 49,500 in full settlement. That means instead of paying 50,000, Shyamlal has been pleased to give a discount of rupees 500. So naturally, instead of paying 50,000, we are paying 49,500. And in our books of accounts or in our journal book, we should write down Shyamlal was credited initially when we had taken the goods on credit from him. Goods means furniture. So naturally, Shyamlal here is to be debited first. Suppose it is on 18th May, Shyamlal account debited to cash and to discount. Cash account here it is to be written as 50,000. Here cash 49,500 and your discount is 500. This is called compound journal or complex journal. Complex or compound journal. When one debit has two credits, it is also to be taken as compound journals, or if one credit for the same, if you are debiting two entries, then automatically it is also compound journals. So Samlal account has been settled with a payment of rupees 49,500 instead of 50,000. That means we have to give this entry, Samlal account debited, to cash account 49,500 and to discount account 500. This is called complex or compound journal.